Analysis. Scalded by means of Russia. Investment price range. Tread carefully in China. London, China, the sole big financial system promising a increase rebound this year, is once more luring overseas investors. Yet the worry that Beijing may also one day become as ostracized from international markets as Russia is maintaining a lid on call for. The scale and coordination of Western sanctions on Russia induced by way of President Vladimir Putin's February 24 invasion of Ukraine shocked monetary markets and left managers sitting on billions of dollars of assets suddenly made worthless in a single day. While such a move in opposition to China seems far-fetched given its financial size and the giant quantity of overseas cash invested there, it is a chance many are reluctant to disregard. The global investment community is on note that if another geopolitical event have been to occur, the precedent is already set for those very restrictive and punitive sanctions, stated Bill Campbell, a portfolio manager at DoubleLine Capital, which manages $122 billion in property. DoubleLine CEO Jeffrey Gundlach labeled China uninvestable because of out-of-the-blue regulatory crackdowns, forcible share delistings and a last-minute suspension in past due 2020 of the multi-billion-dollar preliminary public offering of billionaire Jack Ma's Ant Group. Campbell stated a new paradigm changed into at play where geopolitical occasions threaten instant results for investments and indexes, pointing to tensions round Taiwan and within the South China Sea as capacity flashpoints with the West. China's big weighting in stock and bond indexes supposed investors, consisting of his organization, need some exposure. DoubleLine has been shopping for the bonds of local improvement banks and the use of other Asian countries as proxies for China to avoid tying up too much cash onshore. Sino-U.S. tensions have simmered for years over troubles ranging from worldwide trade to highbrow belongings rights, but Maximum currently Washington informed Beijing it would face results if it supported Russia's war attempt in Ukraine, which the Kremlin calls a special military operation. The United States says China has in large part complied with restrictions, but final week blacklisted 5 Chinese organizations for allegedly supporting Russia's Navy industrial base. An invoice tabled in the U.S. Senate also threatens sanctions on Beijing for aggression in opposition to Taiwan, an island China considers its personal territory. Flavio Carpenzano, funding director at Capital Group, which manages $2.6 trillion well worth of assets, trimmed publicity to Chinese government bonds after Russia's invasion. It does not suggest we assume China is uninvestable or that we anticipate a conflict with Taiwan day after today, but volatility will continue to be high and we don't think the yield carries this form of volatility, Carpenzano stated. BlackRock NYSE, Block, the arena's biggest asset manager and a long-standing China bull, cut its Chinese fairness view in May, warning risks of army confrontation with Taiwan will grow as the last decade wears on. Perceived risk investors pulled $30 billion plus from China within the January-March duration, according to the Institute of International Finance. COVID lockdowns, property quarter strain, and growing U.S. Treasury yields drove the outflows, yet the IIF additionally pointed to the perceived threat of investing in nations whose relationships with the West are complicated. Still, the U.S.'s economic recuperation, contrasting with recession fears within the West, lured to Internet $11 billion of inflows into China-listed stocks ultimate month, Refinitiv Icon information suggests. There is a shortage of things you may purchase in recent times that may go up in charge, stated Mike Kelly, head of multi-asset at PineBridge Investments, who holds Chinese belongings quarter-dollar bonds and is among those shopping for Chinese stocks once more. Kelly mentioned no one buying into China might be completely snug, however he become assured that if they do something on Taiwan, it won't be within the subsequent 2 years. Index giant many argue the sheer length of China's financial system and markets make sanctions less possibly, as they might damage the West far greater than restrictions imposed on Russia.